how bank makes money. We generally think that bank makes money through giving money on interest to some business or individuals. But do you think logically that it is only the process of making money, a banking system? But I don't think so, and it is not the reality. Today in this video, we are going to uncover the secret ways how actually bank makes the money, and we are going to at least discuss 6 different ways through which bank makes money, and which makes them the most profitable institution in the whole world. So, suppose if you go in the bank and if you keep $1,000 in your bank account, then do you think that a bank is just going to keep that $1,000 of amount in locker and it is paying 5 to 6% annual interest rate to you automatically? Is it that right? No, that's completely wrong. And let's discuss what are the several ways through which actually bank makes the money. So number one is interest on loan. So there is difference between the interest loan of depositing and lending of banking system. Suppose if I deposit $1,000 in my bank account, so what happens? Bank generally gives me 5 to 6% of annual interest rates to me. But same bank, if you lend out its $1,000 which was deposited by me, that the bank will charge 10 to 11% to its customer or its clients or to business to which it is giving the loan. And the difference between the interest rate, this is the source of profit for the banking system. Number two, fees and charges. Banking system bank provide us different types of services like ATM services, credit card services, mobile banking services, internet banking services, for which they charge some amount of money from us. This amount may seem small on individual basis, but banks have millions of customers. By taking account on millions of customers, bank makes huge amount of money through these fees and charges. Now let's discuss about credit cards. So bank also make money through issuing credit card and charging commission on every transaction for processing it as a fee. This is also the source of income. But when we default or we are not able to make payment on time of credit card, then bank charges us huge interest rates on that loan. And this is one of the major source for banks to make the money. Bank may charge up to 30 to 48% annual interest rate on that loan. So you should try to generally avoid taking credit cards. But even if you are taking credit cards, you should not make late payment of interest or amount that you have spent in a month. So keep in mind. Number three, investment and securities. Bank also invest their money in different kinds of stocks, bonds, and securities. It can be a government bond. It can be other companies' stocks. It can be others, private technology company startups. So bank may invest their money in different institutions through financial market, and they can generate profit through it and can or use from this process as well as. And now number four, bank can act as an investment banking. Bank can help different other institutions in the process of acquisition, mergers, and public offerings. So bank may charge hefty fees for this, process, and they can generate huge profit from this process as well as. Number five, foreign exchange commission. Bank may charge some fees for, exchanging different currency. Suppose if you are in India and you want to go USA, then you may need US dollar. So you go to the bank and ask them to change this Indian currency into US dollar. So the bank may charge some commission from this process, and this can generate income for the bank. Now number six, reverse repo rate. So what is reverse repo rate and what is repo rate? let's first of all understand this topic. So before understanding the reverse repo rate, let's understand first of all what is repo rate. Repo rate means that the central bank of the country lends out its money to commercial bank when they find any kind of financial crisis, and they can take a loan from central banks for a very short period of time. And this process, the rate at which central bank provides loan to commercial bank, this is called repo rate. And when the central bank takes money from the commercial bank, okay, the central bank gives some interest rate upon that money, and this process is called reverse repo rate. So suppose if the bank have a huge amount of cash flow and huge amount of cash in their banking system, but they are not able to deploy all of their money as a loan. So what the bank will do? The bank will give it to central bank for a very short period of time, and they can earn somewhat interest on that process. And this can be also a good source of income for the bank. And thanks for watching the video. This was all for this video, and goodbye. See you in the next video. Don't forget to like and subscribe our YouTube channel.